Hello, I'm Marlene Saeed. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, leftist leader Lula da Silva has made a historic comeback in Brazil. He's set to govern Latin America's biggest economy for a third time, pledging to tackle hunger and poverty. But will he succeed? Also this week, spending big to tackle inflation in Japan. Will Kishida's $200 billion stimulus package ease high living costs? Or will he be forced to move away from the ultra-loose monetary policy? Plus, lab-grown diamonds are taking the shine of more expensive mine gems. We have a look at why the man-made jewels are becoming increasingly popular among consumers. Luiz Inacio Lula da Silva led Brazil during its economic boom in the first decade of the century. He is now back as its president for a third term after defeating Jair Bolsonaro by a narrow margin. But running the country now could prove much harder than the last time he was in charge. Politically, it's hugely divided. It's short of cash and economic growth has slowed. And Lula has made it clear his priority is pulling millions of Brazilians out of poverty, which he's done successfully before. He won international fame for building an extensive social welfare program during his 2003-2010 tenure. But it wasn't all rosy. He will also be remembered for his administration's involvement in corruption, which led him to being jailed for 580 days. His convictions were later annulled by Brazil's top court. When the president-elect is inaugurated in January, he will take control of an economy that faces numerous challenges. But Lula has given only a few details on his economic plans. He's expected to put the state back at the center of economic policymaking and move away from the pro-market model of the Bolsonaro administration. The president-elect said he would push Congress to approve a tax reform which would exempt low earners from paying income tax. He's also pledged to abolish a constitutional spending cap to allow the government to spend more on social projects and infrastructure. The president-elect has also promised to combine responsible fiscal policy with social responsibility and sustainable development. He's also pledged to put a halt to illegal deforestation in the Amazon. Joining us from Sharjah in UAE is Jairo Lugo Ocando, Dean of the College of Communications at the University of Sharjah and a Latin American analyst. Many thanks for joining the program, sir. Now, on the campaign trail, Lula offered rather broad strokes of his economic vision. There was putting the state at the center of the economic development. What do you make of his plans so far?
Well, it's very interesting because Mr. Lula da Silva, who has been now re-elected, is going to confront a completely different scenario from the one he had in his first government. In this case, we have commodity prices that have come down in the market, which is a stark contrast to the time in which he was president the first time, in which commodity prices were on the rise. The other thing is the debt, the Brazilian national debt, which is seek to double between now and 2027, is a huge problem, which will demand measures of cutting public spending and renegotiating some of the international debts and agreements that Brazil has. And also, Mr. Lula da Silva will now confront both a Congress that is not in his favor and also a series of governorships and municipalities, which will be in the hands of the opposition. So it's going to be a very tricky ride for Mr. Lula da Silva, and it will be a time to prove himself that he's a state person capable of managing the challenges in front of him. So I think there's always the risk that when you're in campaign, you tend to offer more than you can deliver, and it's all about managing expectations. And as we've seen in Latin America, things can go very sour very quickly to new elected presidents once they go into power.
He's promised not to make the same mistakes as his predecessor from the Workers' Party, Dilma Rousseff, who was accused of economic mismanagement. Will he do things differently, do you think?
Well, I think he needs to also correct the mistakes he made in his first term, where cases of corruption were rampant. Remember, there's, the two biggest scandals in Latin America, in the whole of Latin American corruption, the Overtrecht construction company and also other cases of corruption were rampant during his time. So I think one of the things that he has to be very careful is the management of public funds and making sure that he appoints the people who will be responsible for these funds, making sure that transparency and accountability prevail. Because it's not only about correcting the mistakes done by Ms. Dima, or Mr. Jair Bolsonaro, who also made lots of mistakes, but about his own mistakes in his first government. So he's been elected on great expectations, but that also comes with a lot of responsibility.
He's also promised to tackle poverty, tackle inequality. I mean, that's his big thing. But can Brazil actually afford to all that social spending that he's promised?
Well, you know, it all depends how clever and skillful his negotiator of the international debt are. I think there's room for Brazil is still a very strong industrial power in the global south. In terms of some of the exports it has, it's still very well placed. Some of the areas in the economy are relatively good. So I think he has some room of maneuver, but he does need to appoint the right people. And that's going to be very difficult because he came in a very complex set of arrangements with allies to power. So there's a lot of distribution of power that needs to take place, and depends what are their priorities established there. I think here we are confronting a case in which the challenges might overwhelm him if he doesn't have the right team, and if he doesn't empower this team to actually act decisively in particular areas. My main concern is about his political capital that can go very quickly. If you revise my own Twitter account back in the beginning of August, where most of the pollsters were saying that Mr. Da Silva was going to win for a margin of 17 points, I was saying that the margin of his victory would be just 1%. I effectively predicted this because, you know, there's been it's a much more complex situation that people see. The legacy they left both in the government of Da Silva and the government of Dima was a legacy that included huge cases of corruption. People have not forgotten those things, and also in other areas like even in poverty. I mean, we cannot forget that people protested in Brazil by the fact they were building these huge stadiums and wasting all this money in huge parades and big events around the World Cup when they had actually huge needs in the country. And people got really upset and really angry about that.
You paint a very, very bleak picture for him and the state of Brazil's economy. What can he do to turn things round? Can he bring Brazil back onto the map?
Yes, of course. And I think one of the very interesting development is the new alliances at the BRIC stage. I think that Brazil has a very important powerhouse of industry that they can do. I think that even if he needs to do austerity programs, they can be done in a very clever way without affecting the poorest, and with doing it in a way that it can incentivize the industry. I think the government of Brazil has lots of waste in areas that are not really that of a priority, but there are other areas like education, health, and poverty alleviation, in which he can do a lot. And I'm sure the instinct of Mr. Da Silva are there. But it all depends on the ability to appoint a team that is serious, that is accountable, that is transparent, and overall that is efficient. I think he has an opportunity, a great opportunity of providing or leaving a great legacy of a progressive government that can make important changes.
Sounds like he should be hiring you on his team. Really good to talk to you, Jairo Luga Okando, Dean of the College of Communication at the University of Sharjah.
Thank you.
Japan has been battling deflation for years and has kept interest rates near zero to encourage businesses to invest more to help stop prices falling. Now they're surging globally and central banks are raising borrowing costs to tame inflation. But Japan is maintaining its loose monetary policy instead. The Prime Minister, Fumio Kishida, has announced a $200 billion spending plan.
今回の対策は
These holistic economic measures are to overcome soaring prices and to realize economic reform. By addressing soaring prices and the economy holistically, I will protect the lives, employment and business of this country and push our economy forward for the future.
これにより GDP を 4.6% 押し上げ
With these measures, I will push up the GDP by 4.6%. By decreasing the electricity price by 20%, while keeping the price of oil from increasing, I will make the consumer price index down by 1.2%.
Well, the Prime Minister says the overall size of the stimulus package is expected to amount to more than $490 billion. It includes subsidies for household electricity and gas bills and coupons for pregnant women. Some money will be allocated to offering companies more incentives to increase wages, as well as boosting tourism and exports. The government will submit an extra budget to fund the plan to Parliament next month. It will be mostly financed by issuing government bonds. Well, Fumio Kishida unveiled the stimulus package just hours after the Bank of Japan stuck with its policy of rock-bottom interest rates. That's despite the country's rising inflation rate, which was at 3% in September, though much lower than the price rises in the US and Europe. The country's currency has hit 32-year lows against the dollar, and the Japanese authorities have carried out at least 2 interventions to prop up the yen. Joining us from Singapore is Marcel Tilliant, a senior Japan economist of Capital Economics. Thank you for joining the programme, sir. Why does Japan have a relatively low inflation rate in comparison to the rest of the world?
There's largely historical factors behind it. Wage growth in Japan is not very sensitive to labor market conditions, so it's still just around 1 to 2%. The government is also pushing back hard against rising prices, so some of the components controlled by government policy decisions, their prices are barely rising. And also in Japan, the supply shortages that held back that created big increasing goods inflation in lots of advanced economies were never that pronounced because supply chains operated better. So it's a range of factors that are keeping inflation still lower than elsewhere.
OK, relatively to most other countries, inflation is low, but by Japan's standards, it is high. So why won't the Bank of Japan raise interest rates like every other country around the world is doing to keep inflation down? And it would also prop up the yen, wouldn't it, which has also been in free fall?
It would probably pop up the yen a little bit, but it's worth noting that the currency of any major advanced economy have fallen against the dollar this year, with some of them fallen nearly as sharply as the yen, even with central banks hiking rates quite aggressively. And the main reason why the Bank of Japan is not tightening policy is that it's not convinced these high inflation rates are going to stay. About 1/3 of the current inflation is driven by energy prices, and those are already coming off the boil. And the other big increase in inflation was simply driven by the weak yen. So once central banks elsewhere stop hiking interest rates, which we expect to happen sometime next year, then the yen will probably stop weakening, and that upward pressure on inflation is going to subside.
Right. It's the external forces that they think are putting up the prices. So what about this stimulus package? How is this stimulus package going to help reduce inflation?
The main factor here is that the government has pledged subsidies to electricity prices. Now, it's worth noting that electricity and gas prices alone are contributing about 1 percentage point to the 3 percentage point rise in inflation. So about 1/3 of all inflation is driven by this. And as it happens, the government will introduce subsidies around 20%, of around 30%, which will fully offset the current increase in prices and which will therefore take off this 1% increase in price. So inflation will be back below 2% on our forecasts by maybe the second quarter of next year. And that in turn will also push down inflation expectations and should help to prevent, should help prevent a strong rise in wages, even though so far that's obviously not happening.
But will this package stimulate growth?
At the margin, yes. If households have more money to spend, they might spend some of it. But the problem is that the savings rate is still quite high by historical standards. At the moment, households are not particularly in the mood to spend. Consumer confidence is very low. So I wouldn't expect fireworks from it.
Japan has a huge public debt. Can they afford this huge spending package?
Yes, they can. I mean, obviously, it's a bit of a confidence trick. As long as the Bank of Japan can convince investors that it can defend its 10-year yield target and keep interest rates close to zero, then even very high debt levels are easily affordable. But obviously, if investors did test that commitment and the bank were to let loose of the yield target, then the debt level could quickly become unsustainable. Now, our view is that the bank will be able to defend the target because upward pressure on overseas interest rates will start to subside sometime next year. And that in turn means that the huge public debt load is sustainable.
The Bank of Japan has stuck to this policy of ultra low rates for a very, very long time. Has it really worked for them?
I think it has. I mean, when the bank started, we saw consumer prices falling, we saw wage growth negative. Now recently we saw the strongest wage growth in 25 years. Inflation is finally starting to surpass the 2% inflation target, if only for mostly because of the weak yen, obviously in higher energy prices. But clearly things are moving in the right direction. So the deflation that has plagued for Japan over the last 3 decades is now clearly behind us.
What about the depreciated yen? Isn't that putting political pressure on the government?
Yes, I think that's the one area that could potentially trigger a policy change, because obviously we have the current Bank of Japan Governor Kuroda's tenure will end next April, and the government has to appoint a successor. At the moment, it looks like the government will appoint someone in a similar mold to Governor Kuroda, so someone who would continue to keep monetary policy loose. But with the weak yen pushing up inflation and the public increasingly unhappy about that, there is an outside chance that the government will nominate someone who ends this whole loose policy experiment and starts to tighten policy ever so slightly.
Globally, we're looking at many of the big countries heading towards recession in 2023. What is your outlook for Japan?
Well, growth is definitely going to slow, but I think Japan is catching up with the rest of the world because it had a much tighter stance on the virus for a long time. Only recently it started to live with the virus. So households have yet to fully return to normal ways. This household savings rate is still quite high. So that momentum will keep the economy going into next year, even as other countries enter recession.
Marcel Tillion, Senior Japanese Economist at Capital Economics. Thank you so much for your time.
Thank you.
Diamonds are forever. Diamonds are a girl's best friend. We've all heard the expressions. They are the ultimate accessory for anyone who can afford them. But they are facing growing competition from lab-grown ones, which are chemically identical, but up to 10 times cheaper. The man-made gems are increasingly attracting consumers as well as the world's biggest jewellery makers, and their share in the market is growing fast. Well, the industry is estimated to be worth more than $6 billion in sale, a figure that is expected to double in 2025. Data for March showed the sales of engagement rings made with lab diamonds jumped 63% compared to last year. The US remains the largest consumer market for lab-grown diamonds by far, at more than 80% of the demand. India is among countries that saw a sharp rise in the exports of the man-made gems in 2019, worth $443 million. That's up by more than 100% year on year. To discuss all of this, I'm joined now by Ellen Jonkeri. Ellen is the Chief Executive Officer of HRD Antwerp, which grades lab-grown and natural diamonds. Thank you so much for joining the programme, Ellen. I have to admit, when my producer told me about this topic, this was the first I'd ever heard of lab-grown diamonds. Can you tell us exactly what they are? Are they real diamonds?
Well, they actually are from a molecular perspective. So natural diamonds formed naturally 150 to 200 kilometers deep within the Earth, approximately 2 to 3 billion years ago, even at that time when the dinosaurs walked on the Earth. So a diamond needs, and you have to understand, needs a combination of high temperature and high pressure to form. It's actually the purest form of carbon. Now, what is a lab-grown diamond? He's man-made. So we're going to imitate nature we're going to create the same circumstances than what happens in the earth, starting of that carbon mineral. And we're going to create high temperature and high pressure. And we create a kind of rough diamond which will follow the same process as the natural diamond. So we will cut it, polish it, and put it or mount it in a jewelry. So actually, the interesting thing is that it has the same physical, chemical, and optical properties as a natural diamond, except that they are grown in a lab, not really in nature.
Are they an investment, though? We talk about, say, gold being an investment. Is it the same sort of thing?
We're talking about a value here, and this is actually a personal matter and depends on the purpose and the wishes of the buyer or the consumer. The only thing we know today is, for instance, that the lab-grown diamond is around 30% of the value of a natural diamond, which means 40% cheaper. But what their value will be throughout the years remains uncertain. In case of natural diamonds, we can more easily conclude from stock market figures today that they are pretty reliable long-term investments. So at HRD, we don't take a stand on what it's better or what is more worth, but it's, like I said, it depends on your personal wishes. First, it's the most important is to offer transparency towards our final customers. So they know what they buy. Do they buy a lab-grown or do they buy a natural diamond?
What about the carbon footprint? I mean, you're using all this heat in order to turn the carbon into a diamond. Does it have a good carbon footprint or a bad carbon footprint?
This is also all about marketing. The way lab-grown diamonds are marketed, or the marketing people putting them in the market, that's rather the bad part about it, because it's not transparent. So you have to look at the complete value chain. So how is a diamond produced? So if you have a lab-grown diamond factory and they use sustainable or renewable energy, then it could be, compared to a natural one, that the carbon footprint is lower. But in many cases, it's not. It's really not the case, because there's a need of huge amount of energy and heat to create lab-grown diamonds.
Regardless, we are seeing demand for lab-grown diamonds grow. What's behind that growth?
Well, I think we can't deny the power of marketing in this case. So we especially see an enormous growth in the US. And I think many factors contribute to that. Also a difference in market share, because the growth in the US is much higher, for instance, than in Europe. And I think the lobby in the US is a very well-organized lobby. They spend huge budgets on the promotion of lab-grown. And the second reason is pricing. So the growth of the lab-grown in America, they're much more sensitive to the price when they buy a diamond ring in comparison with the EU market, where sustainability, the story, the exclusivity of a diamond are part of the buying process.
What about the Ukraine war? Has that boosted demand for lab-grown diamonds?
Yeah, well, the war definitely had an impact on both products. Russia is the largest producer of natural diamonds in the world, not in value, but in carats, and they produce approximately 40% of the worldwide production of natural diamonds. So due to the sanctions that the USA, the UK, and Canada, and many other big countries, or large countries, they had an impact on the big retailers who chose to stop using Russian diamonds in their jewelry. So I don't have to tell you that the prices that were already historical high kept going up. So this was an opportunity for the lab-grown, a tremendous opportunity for the lab-grown diamonds. So they had a sales bump of 40% in the first quarter. But at the same time, we noticed that the lab-grown producers were not prepared for such a bump, especially in India, where they had to switch back to using natural diamonds because of massive shortage.
So what do you see as the future of the industry? Will lab-grown gems overtake natural ones at some point, or that's just not possible?
No, I don't think, that's my personal opinion, I don't think it will. So there are no indicators today that the diamond industry will fall back in the long term. So they're multifaceted, literally and figuratively. And they're really deeply rooted in our culture and in many cultures as a symbols of love and purity. A man-made diamond is not the same. And then also, more recently, we also see that diamonds are becoming an investment product. So in China, for example, it becomes more and more a trend where people invest in diamonds because they're very easy to keep on hand. So the volatility of the stock markets and the uncertainty of economic changes make diamonds a good investment in the long term.
That was Ellen Jonkeri. Ellen is the Chief Executive Officer of HRD Antwerp. Thank you.
You're welcome. Thank you.
And that is our show for this week. Get in touch with us by tweeting me at Malin Saeed, and do use the hashtag AJCTC when you do. Or drop us an email. countingthecost@aljazeera.net is our address. But there's more for you online at aljazeera.com/CTC website. That will take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. That's it for this edition of Counting the Cost. I'm Malin Saeed. From the whole team, thanks for joining us. The news on Al Jazeera is next.